stocks, as we talked about, rallying on growing speculation that the EU will support Greece and not allow the global economic recovery to be derailed by any potential default. John O'Donohue is the head of equities at Cowen Co. He's joining us from his trading floor here in New York. John, thanks a lot for joining us. Appreciate it.
Hi, Julie.
So let's talk first of all about Greece here. You know, this has been really battering the markets recently. Do you think that that's finally coming to a close here, that we're going to see some sort of resolution on this?
I think ultimately there will be a resolution to this. I think if you think about what happened in the Eurozone with the expansion over the last 5 or 10 years, there's been an awful lot of pushing at the periphery here with economies that were really not as, how would you say it, as mature as a lot of the sort of core Central European countries. So here you have issues that are sort of popping up at the edges, and I think if you think back to the 70s when the UK needed to get bailed out in about 76, by the IMF as opposed to the Eurozone, we could be getting closer to something like that.
But at the same time, you know, investors have not just been worried about Greece, they've been worried about Portugal, about Spain, about Ireland or Italy. So do you think that those kind of worries are going to continue, or do you think if the Greece situation is resolved, then those other concerns will abate also?
Well, I think if you think about it, a lot of these countries, and being Irish myself, I probably know a little bit more about Ireland than the other ones, is that they all are, they're not operated by a centralized government. They're operated by their own individual governments, and I know the Irish government, for example, has put a freeze on wages. They've started to cut spending. They've really taken some pretty interesting moves to address that. As regards the others, I know there's been some move afoot to do this, but I think from the standpoint of the EU itself, looking as to whether they need to bail out Italy or whether it's Portugal or Ireland or whatnot, they're also looking at how those governments themselves are behaving, somewhat similar to the California experience that we have in the U.S. at the moment as well. So I think there's a lot of scrutiny on the individual governments in the countries.
Do you think that the California situation is going to end up being problematic, as a lot of people have talked about?
I think that's to be seen, but I think obviously, you know, as we've gotten into this sort of huge mess with entitlements, and we've got into this huge mess with the unions, we've seen a recreation of what happened, say, back in the 70s. I'll get back to that 70s thing back in the UK again, where they got so far to the left that, in fact, you know, you had 30% of the population supporting 70% of the population, and a few years later Margaret Thatcher came into power and you had a big sea change here. So things may happen like that from a political standpoint, where it's just a lot of what's going on right now is just untenable. You can't keep doing this.
John,
similar to what's going on in the U.S.
Well, John, very quickly here, you know, there's so much focus on political risk abroad, but there's also focus on political risk here in the U.S. President Obama talking about a new jobs bill. Is the market really going to be able to gain much traction while health care is up in the air, while a jobs bill is up in the air?
I don't think so. I think what's happened with the market is it got a certain sense, obviously, from the huge bounce that we had from the March lows up until the middle of January here, and now earnings season has come in, and to be honest with you, the activity level is morose as regards movement. We've had about a 5 to 7% correction in the marketplace.
Even
right
though
now.
The earnings have been relatively strong.
Correct, but there's really there's a couple things. One is that it's very hard to determine policy that's coming out of Washington. It seems to change every week. Obviously, you've got the Republicans as extreme obstructionists at the moment, so there's really not a lot coming out of Washington. And there's really not a lot of top-line growth because companies themselves are not willing to go into the marketplace to hire people with aggressive growth policies. Okay,
John, unfortunately, we're out of time. John O'Donohue, head of equities at Cowen Co. Thanks a lot for joining us.